Breath.
What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a financial or trading advisor. Please trade at your own risk. Now, it's been a little bit since I've uploaded a video. I do want to say thank you guys so much for the love. I mean, it's not a lot, but any love's good love. You know what I mean? 61 subscribers compared to what we had in our last video. Y'all be running up the views. Y'all be commenting. I appreciate that a lot. If y'all ever have any questions, don't hesitate to ask. I'm always, open to answer. I've actually started my FTMO 50K challenge this week. You can go ahead and see here, bring it up really quick. The client area. So this is how it's currently going. It's honestly, not gonna lie, I'm getting wrecked. Nah, I'm not getting wrecked. I'm down 2.5%. It's kind of a bummer. I do gotta make some back, but at the same time, I'm not getting discouraged. I'm not tripping. I'm following my rules. I'm journaling. I'll show you exactly like what I placed and whatnot. Um, I'm sticking to the rules. I'm sticking to the risk management plan. I don't expect to blow this FTMO. I don't expect to, if anything, I expect to, of course, pass the FTMO, but plan B is to get into profit so I could get a free FTMO to, demonstrated that I'm, risk managing and that I can possibly pass it. So they'll hook it up with another one. But you can see here, since I started Monday and today's Tuesday, I've only been trading 2 days. My max daily loss about 3%. No, not 3%. Is 3%? Dang, that is 3%. Man, losing 3% in a full day, that's crazy, bro. I gotta check that. No, that's okay because I'm following my risk management plan that ICT actually gave. Okay. If you don't know that video, it's a risk management video. ICT posted it a long while back, but great video. Check it out. You see everything's going on. It doesn't show every trade. I don't know why it's not showing every trade, but oh, look at here they are. You can see my trades. You can see how long I was in them. Um, honestly, I do want to kind of like show y'all like right here. If we go to my journal and I click on this one right here, just bring it up. So right here, this was a 1 hour slingshot. So I call this a slingshot. Okay. Now, ICT hasn't always been against indicators. I want to show you something. Not this. I bump trippy red. Right here, you can see ICT. This is his channel. This is his video. He posted this 5 years ago. Okay. ICT Forex Scout Sniper Basic Field Guide, Volume 4. And you could go check this for yourself. Hour and 3 minutes. Listen.
All right, so again, with the daily chart, what you're going to do is again, using the MT4 platform, you just go up to Insert, go to Indicators, you're going to go down to Trend. You're going to go to Moving Average. And you're going to be using the 18 period moving average. And it doesn't matter really what colors you use. We're just going to go with this. And then you're going to go and add another moving average. Okay, and make sure it's exponential. It just, to me, it just gives you a better smooth factor in terms of the moving average. In the next period, you're going to be using a 9, and you want to have this color a little bit different. So we're just going to go with red. Okay, and again, the colors are not important. It's just you want to know, for instance, the red one here, the 9. You want to know what that color is in contrast to the slower 18 period exponential moving average. Okay. Now, the importance of having a moving average set like this, what it gives you is it gives you insight in terms of where the institutional flow is. Okay, if you can't see the price swings for what they are naked, this will give you the, again, quote unquote, no brainer. Now, again, it's not to promise that you're never going to have a losing trade. That's not, I don't promise that. No one ever can. But what I'm giving you here, you will not miss the 2 to 4 really handsome setups per month. Okay, and if you just do the simple math on that, that works out to be about a one shot, one kill per week. That's all you need to make a career. And I'm talking a wildly successful trading career. And I know that flies in the face of what you're expecting or what you currently understand, but I'm promising you, if someone consistently draws 50 pips every single week out of the marketplace, if you know how to do that and you can control your equity and know how to apply it, systematically, you have absolutely no idea where that can take you. And it's crazy amount of money, crazy, crazy, insane amount of money if you understand how to do that. But the problem is, you made a simple trade last week or yesterday, and you love that feeling. Okay, you get addicted to that moment of astonishment. Okay, so you want to go back in there and do it again because you like that feeling. You need your fix. That was the hardest thing for me to overcome, and I'm promising you that's
ICT talks so much, but look at this. He has indicators on his chart. Now, I want to fast forward to where he starts talking about them because ICT, he likes to talk. I don't mind it, but he likes to go on these rants.
okay. You need to act slow when you're trying to make money, and then act fast. Fools rush in where it's back in an existing price swing. And we're going to talk about that as we go along. But for now, the building block starts with having the two moving averages right here. Okay. When the 9 period moving average is below the 18, what that establishes, that's your framework for when the 9 period, or in this case, red moving average is below the blue 18 period. Okay. That establishes a bearish framework, okay, in other words, or I like to call a sell model, okay, or sell program rather. And what that does is it gives you the green light go to look for selling opportunities to be a bear, okay, or you want to be selling into rallies, okay. And when the 9 period is above the 18 period, what you're looking for is buying opportunities where you want to be buying a dip, okay, intraday or over the course of a few days if you're a short-term trader. As we make a retracement lower, okay, all that's doing is it's creating a new buying opportunity, okay, and that's what keeps you on the right side of the marketplace, and you arrive at what was discussed a few moments ago, what classifies a trade as high probability. This is high probability, okay? And what I want to draw your attention to in here is, again, avoid the notion of having to feel like you have to pick the tops and the bottoms in the marketplace, okay? There's tools that I have that helps you do that on a higher time frame macro perspective, but we're looking at more dynamic trading. This will allow you to get into the trenches, immediately start applying the tools, okay, on a weekly basis, and then hopefully in your demo account you'll see the fruits of your labors. But it also, I specifically chose this time frame because it will force you to not overtrade, which is one of the biggest, huge barrier for new traders. Day trading is not everyday trading.
Anyways, when the 9 is over the 18, you're looking for buys. And when the 9 is under the 18, you are looking for sells. And this is applied to the daily chart. This is an easy way to get your daily bias, guys. This is crazy. If you look at this example right here, it's pretty crazy. This is this is what I call a slingshot. When price, look at my mouse moving. It's moving right here all over the screen. Look at my mouse. Not this mouse that I'm circling, this mouse right here. When price comes back in to that 18, it touches that 18 EMA, and that 9 EMA stays over, like it's not crossing over like it does here, it's not crossing back into bearish, it's slingshots. It's like rubber, it's like a slingshot. Like you're pulling price into a slingshot and it slings price up. Look at that. Look at how sick that is. It comes into the 18. As long as that 9 holds over that 18, you know that price is gonna hold. It's like a cheat code in a way, dude. It's crazy. You can see it right here again. Boom, slingshots up and takes out this liquidity here. Comes back in, slingshot. Boom. Look at it. Comes back down, slingshots away, but it actually makes a failed higher high. It makes a lower high, and it actually comes back down. Okay, let's see. Look at over here. Right here, price comes into it. Makes a failed higher high, but it makes movement. This is a daily chart. Think about this. On the daily chart, there is so many opportunities on the lower time frame to fill in a daily candle. So like think about it. If this daily is slingshotting right here, all these days, 1, 2, 3, 4, 5 days, that whole week you could be in there looking for buys, catching these big moves. Same right here. 1, 2, obviously it came back in, but these are 2 down days. Whatever. 3, 4, 5. Look at there's 3, 4 up days off of the EMA, and only 2 down days. Hell, you take 2 small losses, 3 big wins, maybe even 4 big wins. You know what I mean? Same right here. As soon as price touches in here, we start looking for that big move. Boom, boom. Like it's crazy. Anyways, now to kind of show you right here, price was in a 1 hour slingshot. So like what I did, I took ICT's daily EMAs and I applied them to the 1 hour. Now, why did I do that? If you check this out, let me go ahead and just type in MTF EMAs. Boom. And we just do like how ICT says the 9 and the 18, right? We don't need this one. We don't need this one. Let's say that we put the 18 red and the 9 in blue. Okay, so blue over red is bullish, red over blue is bearish. Okay. Now, if we let me actually make them a little skinnier. I don't like whenever they're all thick. So look at this right here. I mean, look at price wicked up, held, shot down. Price wicked up today even. And you know what? There was this news that came out today. Fed Chair Powell testifies. This news came out. If you would have, dude, you could have taken sick advantage of these moves, dude. Like right here. Boom. Boom. It's slingshots, right? Look at right here. It comes back into there, and you can see it. Slingshot. Boom. If I like remove the candles, look at the EMA never crossed. The EMA never crossed. So this whole time it was telling you bullish, even though it was going down. It's like look for buys, look for buys. Boom, your buys. And then look at there's another one right here, another one right here, another one right here, another one over here. Now this is the daily chart. So look at how they're like spread out by a good amount. Like this one, for example, happened back in June 28th of 2022. The next one didn't happen until 24, about a month later. Another one didn't happen. And this one right here actually crossed over. So it actually didn't even count. It tried. And you could be looking for bears. But see, this is where it ends up getting like some of them hold and then some of them end up crossing over, right? This one crossed over. But like from this one to like this one over here, it took 84 days. That's nearly 3 months. That's pretty much 3 months, dude. And you don't want to wait 3 months for another setup. Why would you want to do that? So I took it and I applied it to the 1 hour. And these are my 1 hour EMAs. If I drop to the 1 hour, these setups happen way more often. I mean, one happened yesterday. This was Monday. Boom. One happened today. This was Tuesday. Boom. Look at this. Watch. I'll just go back through. You see right here, it was a failed higher high, but it's still slingshotted. It gave us an opportunity to move, right? Same right here. Slingshot. Boom. Nice moves all day. Look at all these slingshots right here. Look at this trend right here. Slingshot, slingshot, run of liquidity. Look at this turtle soup right here while the slingshot held. That's a beautiful setup. Boom. Slingshot, 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 slingshot. Bro, it's crazy. This slingshot is so underrated. I don't think many people know about the slingshot, but using ICT's concepts, every time that price comes into the slingshot area, you could either look for a run of liquidity. You could look for that, drop to the 5-minute, and then look for that market structure shift bullish. Watch. As soon as it ran out the liquidity right here, boom, it ran it out. Where's the market structure shift point? It is right here. No, it's right here on this candle. Actually, it isn't. It's actually this candle way down here. Does this makes the most recent? Why is this a market structure shift point, Jordan? Or hot shot, aka hot shot? Well, because well, just go watch ICT's 2022 mentorship. You'll understand why that's a market structure shift. But you can see the 5-minute fair value gap right here. Boom. This is like ICT's one shot, one kill. It's not like his, but I consider it a one shot, one kill setup. So you enter right there, stop loss right here at 8 pips. Slingshot. One to 7R. It ended up hitting. And of course, you don't have to target that. You could target these highs right here, and you still hit like a 1 to 3R. Excuse me. So like that's how you could take advantage of a 1-hour slingshot. Of course, you want to wait till you're aligned with your kill zone. You want to wait till time is in alignment. And you could see right here, as soon as like we tapped in, it was 6:45. So that one right there, you probably wouldn't enter if you were disciplined enough to wait for your time to trade, but you could see another displacement come right after. And if this is considered an intermediate term low, it should not get broken, right? Well, you see this fair value gap right here. Price comes into it at 7. Boom, right at 7. As soon as that kill zone opens, you get an entry opportunity. And you put your stops right here, right below the one candle of the FEG pattern, about 11 pips. This one. You can see that it just flew. Even if you targeted these highs right here, I mean, it was only only 1.5R, but shoot, depending on your risk parameter, however you want to manage your risk, however you want to, as a trader, however you want to do it, however you want. But you could see that it's brutal. Look at this. As soon as it crosses over, price comes back. Now, EMA crossovers, I do want to point this out. On an EMA crossover, price can either hold under the crossover or it can come back and slingshot. Okay, one of two options on the crossover. You can see the crossover price holds above the 9. On the crossover, price held below the 9. On the crossover, price held above the 9. You see that? You see that? So on the crossover, let's say for the crossover example, watch. Oh, what happened? What happened? Oh, whoa, what was that? That was a crazy, whatever. Anyways, let's say, for example, like right here, right? Price crossed over right here on this candle, right? As soon as price crosses over, what you're going to want to do, you're going to drop to your 15-minute or your 5-minute, whatever time frame you feel more comfortable with. I feel like they're kind of very similar. It's just 5-minute actually gives you a little more detail. So I like the 5-minute. And you can see here at 2, this is your London session, right? At 2, what did price do? Once it crossed over on this candle, remember. Once price begins crossing over, you want to start looking for a bearish opportunity, or it'll come back up into your slingshot. But on the crossover, you want to look for an opportunity on the smaller time frame on a 1-hour crossover, right? Look at this right here, turtle soup. Boom. Once this turtle souped, I hope I could go back on the 1-minute watch. Let's see if I could do it on the 1-minute. As soon as it's like a 5-minute turtle soup, You want to drop to the 1 minute? Ooh, and it let me. Let's see this. Right here on the 1 minute, you can see that turtle soup, 5 minute turtle soup, market structure shift point was actually down here. So this is your market, oops, this is your market structure shift wick. This candle takes it out. And now my rules for the market structure shift, and honestly, like I back tested this and I think it's pretty solid. After the market structure shift candle, this next candle has to open and close. Okay, but this candle can also be the candle that comes back and taps us into an FVG, but you can see there's no FVGs here. So we expect this candle to open, close, potentially make an FVG. And you can see that it made an FVG right here with this one as soon as this candle closed, right? Pretend like this candle wasn't here. This is our rule. Market structure shift candle, we need this candle to open and close. If there's FVGs up here on the market structure shift candle from there up, then this candle can come and tap into that and we'll enter there. If there's no FVGs, we anticipate this candle to create the FVG for us to enter on, right? So right here, you can see this candle happened 2:14 a.m. London session. Now everything is aligning, crossover. We just got a 5 minute turtle soup, 1 minute market structure shift bearish. Everything is looking good. We're going to go ahead and place a sell limit right here. We're going to put stops at like 4 pips. We want to put it above this one candle right here. And I like to put a little bit of breathing room. Okay. And I mean, if you want ICT, I seen a video where he targets like 1 to 2.1 R, just a little bit extra to cover like spread and things like that. But if you wanted to like target that, watch, let's see what happens. Obviously, we know what happens, but you can see, boom, we got tagged in right there. Boom, take profit hit. Got tagged in up there, take profit hit, right? And that's how you can take advantage of a crossover. On crossovers, on a 1 hour EMA crossover, drop to the 5 minute, look for your kill zone, 2 to 5, 7 to 10 on Forex. And you want to look for either a 5 minute turtle soup or like a retracement into like a 15 minute fair value gap or something. You know, like look at this, perfect. Look at this is a, oh my gosh, everything just adds up. Look at this 15 minute fair value gap right here. Boom. It retraced up into that 50. If I delete this pink line, look at how sick. Price retraced up into that 15 minute fair value gap right here. Respected it because remember the one candle of the fair value gap, as long as it's not violated, that fair value gap is holding. And that's, in my opinion, my own back testing research. You know, do your own due diligence, but that's what I've came to understand. And you can see the 5 minute turtle soup. Boom. Dude, everything just looks really clean right here. This is a beautiful setup, y'all. On a 1 hour EMA crossover. I know EMAs are lagging indicators. You don't want to trade the crossover on the hourly time frame. If the hour crosses over, you don't want to enter based off the hour time frame. Nah, heck no. Drop to that 5 minute, drop to that 1 minute, look for your kill zones, look for a turtle soup, a fair value gap, and then look for that market structure shift, dude. It's cake. Honestly, that's literally it. Like, dude, I just showed you two setups. Look for the crossovers, anticipate it to continue like it did right here. Anticipate it to continue down. Dude, if we would have held that, that'd have been dirty. Anticipate it to continue on the crossover and hold below the 9 EME. If it doesn't hold below it, anticipate a slingshot. If that slingshot doesn't hold and it recrosses over, go back to this. Look for the price to hold the 9 EMA and look for that opportunity. Look at like right here too. Like let's say price slingshotted right here, right? Whenever price came to slingshot, you're gonna drop to your 5 minute. You're gonna look for that market structure shift, right? So market structure shift point was right here. Boom. And you know what? This is actually an ICT breaker block. The reason why it's a breaker block is because it ran liquidity and immediately shifted structure as well. Boom, ran out this side of liquidity, immediately market structure shifted. So this is a breaker block. There is no fair value gap here. You see that? So we take the entry off the breaker block. And you can see as soon as price took out right here, that fourth candle didn't do nothing really. But as soon as it violated the shift spot, it created the breaker block. As soon as it violated it, it created the breaker block. And as soon as price taps that breaker block, you could enter. But even then, you can see here that price shifted again right here. Boom. Shifted on this candle. There's no fair value gaps, right? But wait for that next candle to close. And then there's another candle right here that closed. And here's a fair value gap. Now here's another one you can enter off of. Boom. So you could have been a seller off the breaker block. As soon as these candles are trading up inside of the breaker block, you can be a seller here, stops above the breaker block. For example, on these candles, stops above the breaker blocks, it'd be about an 8 pip stop loss. Or you could be a seller right here at this fair value gap, and your stop loss would go above the one candle of the fair value gap, which would be right here, and it'd be about 7 pip stop loss. 8 pip stop loss, 7 pip stop loss. This right here is like your intermediate. Well, it actually didn't fill a fair value gap, and intermediate term swings are only created on fair value gap whenever they rebalance an imbalance, or whenever there's a swing like a head and shoulders pattern. Whenever there's a swing to the left of it and to the right of it like this, that's lower than it. This is an intermediate term high. This is short-term high, right? So there's two different ways to find an intermediate term high. So this would actually be your intermediate term high. This one would just be considered a short-term high. And you could see that price just, I mean, obliterated from here. Now, what time did this come in at? What time did this happen at? It happened in our 7 to 10 New York Hill Zone. Boom. 7 to 10. Sick, huh? Sick, dude. It's so sick. It's crazy. I was tripping. I was like, ICT used EMAs before. And then I went and applied them. And I was like, dude, these EMAs are actually a cheat code. These EMAs are actually a cheat code, bro. Honestly, dude, if you like, look at right here, it comes back, it retraces, turtle soups, takes out this liquidity, and it actually doesn't take out this liquidity. It doesn't take out this wick or anything, but it takes out this liquidity here. It actually retraced into this fair value gap right here that actually held in the past. See how it held here? Turtle stooped it, held it right here. Boom. So you want to look for that 1 hour fair value gap on a slingshot as well, or the turtle soup, to kind of help your analysis, to let you know where it's invalidated at and whatnot. Like right here, example 2. Here's the turtle soup, right? It swept out that liquidity, and this 1 hour fair value gap held, because remember, the one candle of the fair value gap, as long as it's not violated, that fair value gap is valid to hold. And you can see that right there. Same right here. Here's another 1 hour fair value gap that held right here. And as long as this 1 hour isn't violated, that's a valid fair value. Dude, this shit's crazy, huh? It's insane, y'all. I just want to make this video for y'all real quick to show y'all how powerful this strategy actually is. I am using this to get funded. You can see this is 1 hour slingshot, price retraced and took out 5-minute liquidity. Then 5-minute market structure shifted at 6:35 before 7, and price tapped into the 5-minute fair value gap at 6:45. So we couldn't enter, but this created the intermediate term low, and 1 minute market structure shifted off this 5-minute fair value gap, creating two 1 minute fair value gaps. Well, when 7 open price and tapped into both those 1 minute fair value gaps and flew from there. So you can see here, this was my loss. This was my 2% loss right here, actually. Boom. Actually, this one was break even, and this was my 2% loss. Okay. So that was a 2% loss. And then I recognized the 1 minute fair value gaps. and they were right here, right here, right here, right here. That's the two fair value gaps on the 1 minute. So I took this entry right here and I put stops. I put stops a little too deep, honestly. I should have left them there, but I also seen a 5 minute that fair value gap that I thought might have been tapped, and I just wanted to stay a little safe because I had already lost 2% for the day, and I was like, I don't want to lose 3%, bro. Um, but you could see that I had re-entered right here, and this trade came in. Um, I wrote it down right here. This trade happened at 7:50 a.m. yesterday. Okay, so if we go yesterday and we look at 7:50 a.m., let me just delete all this. 7:50 was right off the it's so dirty. Right off the slingshot, dude. And I only claimed, gosh, man, it sucks because I only claimed 0.90%. It hit a 1-to-1 R, and I was like, screw it, bro. Boom. And I claimed it. But dude, if I would have held it, that trade alone would have passed the FTMO. It would have been so dirty. That trade alone would have did it. Like, because it hit dirty too, honestly. Watch. Let's go to 950. Let's go to the 1 minute just so I could show y'all how dirty this was. It was crazy. It sucked that I closed it. Oh, I was so furious with myself. I was like, you know what, bro? It's okay though, because your direction was right. You knew what you were doing. You recognized your mistakes from that 2% loss and you weren't greedy with it. You know what I mean? I know that it sounds like I'm being greedy, but I wasn't being greedy with it, right? But straight up, dude, I was like, oh no, it was tough. Anyways, this is the fair value gaps right here. This is the fair value gap as well. And see, I don't think I should be implementing the 1 minute with the 1 hour slingshot. I think I should just stick to the 5 minute because let's see, on the 5 minute, you could see that the slingshot happened. Obviously, I did show you that the slingshot happened before, but then it created this FEG right here, and we possibly could have got in on the 5 minute. Um, but right here, watch, let's see where were my stop loss was a little low. Where was it? It wasn't. Entry was at 1.06353, 1.0, okay, 1.06353, and then the other one was 1.06283. That's my stop loss. 6283. Boom. So it was a 7 pip stop loss. Okay. And dude, it freaking flew. I'm so tired about it too. I'm still so tired about it. But look at that, dude. 1 to 8 R. Okay, it wouldn't have passed the FTMO alone, but still 1 to 8. Oh, it's still tight. I'm still tight about it. It's okay though. It's totally cool. And you know what? That's why I'm so confident and not discouraged being down 2.5% because I know what I'm doing. I feel confident and that confidence is going to bring me success. I read this, you guys, whenever I'm getting ready to trade. I've been reading this every morning, right? This is my business plan, my trading business plan. And right here, this motivation, I believe in myself. I can do anything I set my heart and mind to, anything. I predict and expect that I will hit my goals and ask myself, how will my life change when I accomplish this? Appreciate and be grateful to God and myself for hitting my goals, but don't ever get overexcited, Jordan, because this is what I expect of myself. I am the fucking man, and big payouts, vacays, and freedom are the new norm. I expect this. I am my biggest fan. If no one acknowledges me, I acknowledge myself. If no one supports me, I support myself. I keep showing up, keep going hard, stay consistent, even through downs. My results will turn those who ignored me into fans. I choose to shift the trajectory of my life so I can live up to my true potential. No excuses. Life is too short to make excuses. Being lazy robs me of my energy. My life is a series of lessons I learn. I do not dwell on the failures. I look at those failures and know what not to do in the future. I align myself to make a change. With my one life, I will live it to the best of my ability from the beginning to the end. It's me against me. The only person that gets in my way is me. I'm gonna always be a step ahead because I think differently. I make myself better to put myself in a position to make others better. Hard work brings great rewards. The safest path brings the least reward. So stop being afraid of what can go wrong and start believing in what can go right. I dare to face my fears. I dare to take risks. I dare to be better. How bad do I want it and what am I willing to do to get it? I believe in myself way before anyone else does. I believe in my capacity for greatness. Success isn't about greatness, it's about consistency. I show up day after day and work hard, give my full effort, and leave nothing on the table. Greatness and success will come. I'm never scared or nervous or anxious to try something new or do something I've done before. I go into each venture with a shark mentality. I'm there to kick some fucking ass. I'm there to get shit done and be the best at doing it. I don't ever get discouraged by bullshit that may slow me down. And I never, ever think about the obstacles, only the end goal. I envision the end goal and I get after it. Bro, that motivates me so sick. And if you're not motivated, you better get motivated and you better start trading hard. You better start studying so much. You better start back testing so much. You better have notebooks full of fucking paper, just filled with notes. You better have annotations. Your computer better start telling you that you're running out of storage because of how many charts you are saving with annotations. Dude, do it. You have no idea if you do have an idea or if you don't, the amount of potential there is in trading, it's mind blowing. Blows my mind. Do it, dude. Do it. Like, really motivate yourself to do it. If you're watching this video, if you're here right now and you're listening to this, do it, dude. Like, seriously, you got this. Don't worry about any distractions. This is your career. This is your life. This is what's going to feed you, your family's after you. Dude, I love this one right here because where is it at? I wrote right here, we all die. The goal isn't to live forever, it's to create something that will. And I'm telling you, trading can do that. Trading can do that. I appreciate y'all if y'all watch to the end. I hope you learned something cool in this video. I hope I brought you a little bit of motivation, inspiration, and I hope you definitely take it to the next level. I wish you all the best. If you like this video, make sure to leave a like. If you're not subscribed, subscribe to the channel. Yeah, y'all, we'll see you in the next video. Thank you.